Well, I think Bitcoin's going to get to 250,000 within a few months. And if Ethereum price ratio to Bitcoin gets back to its 8-year average, that's $12,000 for Ethereum. I think crypto prices have bottomed. And I think that in the next 8 weeks, we're going to shatter the Bitcoin 4-year cycle.
In this market analysis, we bring you a major update from Tom Lee, who just shared his latest insights on the current state of the crypto market, specifically on Bitcoin and Ethereum price movements. He broke down his latest price predictions for both the near and long term. He believes that in the next few weeks, Bitcoin could shatter all expectations. He also lays out all of the important updates that crypto holders and investors need to know. Let's hear what he has to say.
Crypto's had a rough run since October. Pessimism has risen. I've known a lot of people that are ready to throw in the towel. And so I think this is a great time to be talking to you about crypto. The selling that nobody can explain. I think many people can say why they think crypto prices have fallen, but nobody really understands why. This is Bitcoin's year-to-date performance. And Bitcoin was having a good year until October 10th. Now, after October 10th, a lot of people tried to explain why crypto is declining. It's the quantum risk to Bitcoin, crypto winter starting. I have so many traditional investors telling me that's the only reason. They say, Tom, it's the 4-year cycle. Of course, we had the October 10th liquidation event, the biggest liquidation in history. MicroStrategy recently said they might sell their Bitcoin. That scared some people. MSCI may exclude digital asset treasuries from indexes. And of course, Tether got a ratings downgrade. So maybe some of these could explain why crypto is down. But crypto was up 36% until October 10th, and then it's gone straight down. I personally think it has a lot to do with deleveraging. And as you know, after the FTX collapse, it did take 8 weeks before market makers recovered and crypto could start to see price discovery again. And we're basically 7.5 weeks past that event. We've begun to buy Ethereum again. You can see last week we bought almost 100,000 ETH, twice what we did 2 weeks before. And I will give you a hint, we definitely bought more than that this week because we believe Ethereum prices have actually bottomed. So we're bullish on Ethereum. But let's go back to the 4-year price cycle for Bitcoin because it's still hard to escape this chart. 3 of 3 times since the history of Bitcoin, the 4-year cycle, or 3.91 years, exactly called the top and the lows. So the question is, why is Bitcoin subject to a 4-year cycle? We asked the Fundstrat Digital Assets team to give us the 5 most logical reasons for this. There's the halvening cycle, there's monetary policy, margin debt. But the 2 things that I think have actually become more important in our view is gold versus copper, and then the ISM, which is just your traditional economic business cycle. So let me explain. So the halving could explain Bitcoin because the halving is pre-computed, but the problem with the halving cycle explaining Bitcoin's price is that there's a lot of other things that have a 4-year cycle. Presidential elections, Olympics. But there are some things that follow a 4-year price cycle that no longer follow a 4-year price cycle. And one of them is copper versus gold. And this is a tweet from AO BTC analyst. And we decided to recreate it, which is, let's look at the ratio of copper prices, which is measuring industrial activity, to monetary base, which is gold. And in the past, you can see it had a predictable 4-year cycle, except this time. And if you line it up with Bitcoin and copper, they actually line up almost perfectly. But copper and gold are not in a 4-year cycle now because that ratio should have peaked this year. Here's the question I'd ask you. If the industrial cycle is no longer following a 4-year cycle, and copper gold isn't following a 4-year cycle, I'm going to say I don't know if Bitcoin should follow a 4-year cycle. So I'm not in the camp that Bitcoin price has peaked. And the only way we'll know is if we make new highs in January, which is our bet. Ethereum in this year, it's having its 1971 moment. I've done past dedicated videos explaining this, so I'm not going to spend much time on it today. But what I'm saying is that in 1971, the dollar went off the gold standard. And in 1971, it galvanized Wall Street to create financial products to make sure the dollar would be the reserve currency. Well, in 2025, we're tokenizing everything. So it's not just the dollar that's getting tokenized, but it's stocks, bonds, real estate. And Wall Street is again going to take advantage of that and create products onto a smart contract platform. And where they're building this is on Ethereum. This is a list of basically every major financial institution, and they're building products on the blockchain. And today, if you look at the share of real-world assets, and the prior panel talked about that, the majority of this, the vast majority, is being built on Ethereum. Well, I think Bitcoin's going to get to 250,000 within a few months. And if Ethereum price ratio to Bitcoin gets back to its 8-year average, that's $12,000 for Ethereum. I mean, that's a huge move. If it gets to the 2021 highs, that's $22,000 for Ethereum. But I think Ethereum is going to become the future of finance, the payment rails of the future. And if it gets to 0.25 relative to Bitcoin, that's 62,000. So I think Ethereum at 3,000, of course, is grossly undervalued. Larry Fink says we're at the beginning of tokenization of all assets. And there's 5 reasons tokenization unlocks things, okay? It's fractional ownership. It does reduce cost. It allows 24/7 global trading. There's more transparency. And in theory, there's more liquidity, okay? But I would say that these are just the raw ingredients. And in our minds, tokenization is actually going to take Wall Street into a next level of evolution.
Today, Bitcoin and Ethereum are showing positive movement, rallying to 2-week high levels. The overall cryptocurrency market is being lifted by growing optimism about potential interest rate cuts by the U.S. Federal Reserve. Bitcoin has moved higher, consolidating below a key resistance zone. Ethereum is seeing an even stronger climb, having pushed past a major price level. This upward trend suggests a return of risk-taking sentiment among investors who view both assets favorably when central banks are expected to adopt looser monetary policies. The general mood is constructive, with the market showing resilience after recent volatility.